Welcome, everyone, and thank you for being here today. Today we're going to discuss how business owners overpay the IRS and what their CPAs entail them. Honestly, I want to get right into it because your time matters. As a business owner myself, I understand the risk you've taken. You showed up every day, you've generated real profits, but right now the IRS is stealing out your pockets. Most business owners who make at least $80,000 in profit overpay the IRS close to between $15,000 to $30,000 per year in an avoidable self-employment tax. And the issue is a lot of taxpayers are not thinking about this structural change, which is going from LLC to S Corp. And most CPAs don't even bring this up. Every dollar you sent to the IRS in April was a decision you made throughout the year. And honestly, a lot of small business owners should be doing tax planning throughout the quarter, not year end. Filing your tax return reports history, but tax planning changes history before it happens. And one of the major things a lot of small business owners do not think about is the S Corp election. The S Corp election exists in the code, and a lot of business owners I have not heard from it, and also their CPA have never discussed this matter. One structure move eliminates 15.3 self-employment tax on a significant portion of your profit. This tool is been in the IRS code for decades, and today you will finally hear about it. Here's what most business owners don't know about their tax bill. First, 15.3 self-employment tax on every dollar of profit, and that's before income starts. So when you think about that, assume that you made close to $200,000 net. That's $28,000 gone before any tax bracket adjustments. Secondly, the S Corp election splits your income into salary and distribution. Distributions are not subject to self-employment tax, and most business owners have never heard this from their CPA. And number three, every year without a year-end projection is a year every strategic window closes before you knew it was open. Quick background about who I am. My name is Busayo Ogunsanya. I've been a licensed New York CPA for at least 18 years. I hold a master's in taxation from Fordham University, and I've been a CPA for close to 18 years. I've saved my clients over $100 million in tax savings. I've also written 8 tax books. I've been featured in the Wall Street Journal, Forbes, and Crain's magazines. My prior professional experience stems from working at Ernst & Young, KKR, and JP Morgan, and that's before founded my CPA firm, Big Apple CPAs. And I want you guys to take this line with you. Tax strategy is something that never really catches to a lot of small business owners' income. And when you think about that is you have to make an active plan quarterly with your CPA. Also, I want you guys to look at this page right now. I want to show you guys my actual credentials. These are my actual credentials. And on the left, you see my CPA. My license number is 105662, issued in November 2010. On the right side is my master's in taxation from Fordham University. I'm putting this up because in tax planning, credentials are accountability. You're trusting somebody with something very important, which is your taxable income and your tax structure. And I think you should know who is behind that. So here's the most important idea of this webinar and training. Tax preparation. And when I think about tax preparation, I think about, 415, 1015, you're reaching out to your bookkeeper, your tax preparer. And pretty much what they're doing is they're reporting things that already happened. They're filling out paperwork, they're filling out documentation. It's filed after the year's closed. And pretty much all you have is a locked-in decision. You get an invoice, you get a bill, and that is not a plan. And I want you guys to think about that. They're reporting already what happened. They're telling you things are already closed and give you a bill and it's not a plan. This is the minimum, and this is what you guys get, the minimum effort. Tax planning looks forward, and that's what we specialize in. We're changing the outcome before the year closes. We're coordinating by entity, retirement, and timing. And the goal is to put money back in your hands. As a business owner, you most likely think as a CPA as a cost center. We like to think of ourselves as a profit center and also your outsourced CFO. And also, what I'm going to walk through is actually a case study from one of our clients. One of our clients came to us as a sole prop, as you guys know, which is a Schedule C or a single member LLC, and they had a net profit of $195,000. Before they were working with, I think, an accountant or a CPA, I'm not sure. And the reality is, that prior accountant didn't do any entity review. They didn't consider S Corp election. They didn't consider a retirement vehicle. And when you think about that, that's roughly 15.3 self-employment tax on every dollar made. And in April, there's another surprise, another tax bill. So here's this is what I did. For this client, we filed the S Corp election, which is Form 2553. We set a reasonable salary of $75,000. And one thing I want you guys to really understand is with the S Corp, you must have a salary, and that's something we help you determine. And the remaining $120,000 flowed back to my client as distributions. And the key part is I want you to think about this. Distributions are now subject to self-employment tax. And the last thing we did is we opened a solo 401k for my client. And we built a year-end projections in October, the first one she's ever seen. I want you guys to take a screenshot of this right here. When you think about this strategy, this is something we do for our clients quarterly for them to understand their tax position. So when you look, and in the previous slide, I showed you the tax savings for our client. When you think about the $19,000 per year, what that actually means for our client that we saved, it's not a line item that we just write off in your tax return. We look at that as a retirement contribution that compounds over 20 years. That could be a down payment for a house that my client has been thinking about. That's the new hire they could finally hire for the business to scale. And also, when we think about that, that's the business reinvesting that accelerates your growth instead of funding the government. Tax savings are decisions about your life, not just numbers. And that's something we take personal. When you stop overpaying taxes, you decide where the money goes, not the IRS. So I've been a CPA for 18 years, and I think I mentioned that. And there's roughly 4 patterns that I've realized, and I'm going to walk you guys through this. Pattern number 1, a lot of business owners come to us with business income, but with no tax structure, and every year they're overpaying. Sole props, which are default single member LLCs, and Schedule C filers pay self-employment tax, which is Social Security and Medicare, on every dollar of profit before income tax. So I want you guys to imagine this. Imagine you guys make $200 of profit. That's over $28,000 gone before your bracket even applies. Most business owners write that check in April and assume it's normal. That is not normal. It's what happens when there's no tax structure. And I want you guys to really understand these patterns I've realized. The second pattern that a lot of business owners don't think about is a deduction. Most business owners think that the answer is finding more write-offs. That is very, very poor decision. A deduction reduces your taxable income by $1. Structure changes how your income is classified, how it flows, and what rate is taxed at. So I want you guys to think about this. 2 business owners with identical revenue can have $30,000 different tax bills based on the entity structure. One has a plan, the other has a folder of receipts and an April surprise. And honestly, I've been doing this for 18 years. You don't want a surprise in April. Pattern number 3, and this is very expensive. So I want you guys to, really hone down and think about this. I want you guys to hear this. The calendar is the one thing that nobody can amend. S Corp elections, retirement plan setup, entity decisions, payroll structure. The best business owners think about this. The strongest moves happens before December 31st, not, randomly throughout the year. In April, your CPA files what happened. They cannot undo what you decided to do in October. And every year you wait is a year those savings compound for the IRS instead of you. So I really guys want you guys to think about this. A lot of new clients come to us after April 15th, and I'm telling you, hey, there's only roughly 2 to 3 things we can do for you. But ideally, when you decide to work with us, you're going to sit down and we're going to go through the calendar. And ideally, this is quarterly, where we could go through piecemeal by piecemeal every tax item that could apply for you. And pattern number 4, a plan and rhythm. When you think about this, assume that you have $80,000 of business profit. 1 year is not enough. That rhythm looks like this. And this is what we specialize in. We take a look at your income review. We do estimated tax checks. We look at your payroll entities, your retirement size, and also we do year-end projections. As the business owner, your focus should be scaling your business, building your business, getting to those high 6, 7, 8 figures of revenue mark. But without the right tax structure, without the right tax team in place, without actually doing the quarterly tax planning, this is not going to work. Our goal and focus is to help you make sure you keep what is earned. That's the whole job that where we specialize in. And so this is what we offer. The S Corp election and the setup package. And you guys see the range on the screen. And this is what is included. You will work with me for a full year, and this is what we'll cover. The S Corp, we help you file the S Corp election and make sure it's filed correctly. We'll help you set up a reasonable salary, which is documented and defensible if the IRS ever asks. We'll also help you set up your payroll with the proper setup guidance. And also, what we really specialize in is we will help you with a first-year savings projections so you can see the math before we file anything. And that's a written action plan. You can step out and try to figure this out yourself. And it's tough because you're not a CPA and you might not know the different type of situations you can encounter. But our goal is to help you in terms of every single matter of your business and make sure that this is a complete structured move and built around your specific numbers, not some random generated tax insight plan for you. So to be very frank in terms of our services and to be honest in how we work, first, we take limited numbers of new strategy reviews every month. And this is done personally by me. It's not handled by a junior associate or random CPA. You work hand on hand with me. And when the month is full, the Calendly links closes. This is not a sales taxes. This is just how we work. Our goal is to find the most qualified business owners who's serious about scaling their business, who's tired of overpaying the IRS and wants to win on a higher level. And secondly, when we work with our individuals, we also offer a complimentary review of your most recent tax return, which is yours to keep. Whether we decide to work with us or not, there's no strings attached. And to really close this out, I want you guys to take a step back. Today, we discussed why you built the business, you earned a profit, and why the IRS is getting a major slice of that profit. Because first, you don't have the right tax structure in place. You're not doing any tax planning. You're not having the right CPA that you're working with you. But right now, our goal is to make sure that we can offer you these services. And I want you guys to really think about this. We'll take a look at your income. We take a look at the tax entity that you have and what's available to you before December 31st. And honestly, we might not be a right fit or we might be the right fit. If it's not a fit, I'll tell you in the first 10 minutes. And this is not a sales pitch. It's not a pressure tactic. It's just facts. So I want you guys to click on that link and to book your first strategy call. And what you get in terms of our services is to figure out whether you're right fit for us. But if you're right fit, what you get is us helping you out to fill out the S Corp election filed, help you out set up the reasonable salary expectations, help you out with your retirement planning, and give you an action tax plan quarterly. I look forward to hearing from you. And my name is Busayo Ogunsanya, and I thank you for listening to our webinar. Take care.